Well, the hike in energy prices was partly due to a delayed decision to increase oil output after a key member of OPEC Plus objected to a proposed deal. The Organization of the Petroleum Exporting Countries and its allies met to talk about boosting production amid surging demand. Saudi Arabia and Russia proposed to raise output by about 500,000 barrels per day starting in August. But the United Arab Emirates opposed the deal, extending supply cuts to the end of 2022. Negotiations are expected to continue on Friday. Well, for more on what's next for the oil industry, I'm joined by Andrew Lipow. Andrew is the president of Lipow Oil Associates. Thank you for joining us today.
Thank you very much for having me, Rachelle.
So first, start with market reaction to all today's developments.
Well, we saw WTI prices move up around $1.75 a barrel to just over $75 a barrel, because when the market heard that OPEC Plus only wanted to increase production by 400,000 barrels a day each month to the end of the year, that's simply not enough to counter the decline in inventories that we're seeing. And by OPEC Plus's own reckoning, if they had done nothing, August would see world inventories decline by 1.5 million barrels a day, and the fourth quarter we'd see inventory declines by over 2 million barrels a day. So the market is sensing increasing tightness of crude oil supplies.
So then walk us through some of the main highlights and developments coming out from OPEC and OPEC Plus members today.
Well, I think the most interesting thing was the fact that we didn't get an agreement today. The market was expecting that they would walk out of there with a 500,000 barrel a day increase in August and continued increases later on. But I think, OPEC continues to be worried about the return of Iranian oil to the market, depending on how negotiations with the United States pan out, and what is going to be the impact of the COVID Delta variant that we're seeing result in lockdowns in a variety of countries around the world, most notably Australia.
So then you talked about some of these factors. What do you think is going to be the primary factor that's going to make or break whether or not this deal goes forward?
Well, I think that amongst OPEC Plus, they have to really determine what they think the supply-demand balance is. And as I said, I think there's actually a number of factors, not just the one, because it's the supply on the one hand, which they control, but the demand on the other side, which they don't control, and they have little control over what Iran does with the United States. So they are in a dilemma like the rest of the market in order to determine what to do going forward. But one thing that we do know is OPEC Plus does not want to return to the prices that we saw a year ago when the market was just simply awash in oil.
And obviously over the last year, also contending with the pandemic, how much has that impacted the course that OPEC and OPEC Plus countries are taking?
Well, there's no doubt that the pandemic is number one on their minds, and we saw that when earlier this year they restrained production by about 10 million barrels a day. Now, up till this meeting, they still have yet to restore 5.8 million barrels a day. So they've taken a lot of oil off the market. Their strategy has worked. Oil prices have risen to the highest level now in a number of years. Their budgets domestically are looking better. And that's the strategy that they're going to continue with, to restrain production in order to try to maximize their revenue without spiking oil prices.
So what about consumers? Obviously, a lot of people watching the prices at the pump, especially with a lot of summer travel. What does this mean for them?
Well, the consumer is going to pay more. We're already seeing that in gasoline prices here in the U.S. They're averaging about $3.12 a gallon. I expect they're going to go up another 5 to 10 cents a gallon over the next few weeks. But more importantly, you're seeing price increases in diesel fuel, and diesel is a transportation fuel that we use to move goods and services, not only here in the U.S., but around the world. When you think about trucks and rail, as well as jet fuel prices are rising, which increases the cost of airline tickets for the consumer.
So then what else are you keeping an eye on in the coming months regarding oil? What could really make or break what happens next?
Well, I think the number one thing that I look at is the vaccine rollout, not here in the United States, which has been pretty good, but what happens in the rest of the world? What happens in places like India or Southeast Asia or in Latin America, where it's really been a slow go on the vaccine rollout? And given that the world economy is a global one and we're all tied together, we need these other trading partners between countries. we need the entire world to improve its vaccination. So that's really number one on my list.
And just very quickly, in terms of the domino effect of what happens with OPEC and OPEC plus allies, what about these other oil-producing countries?
Well, the other oil-producing countries, especially the United States and Canada, are enjoying these higher prices. And certainly here in the U.S., where the capital expenditures in the shale regions has been restrained as their free cash flow is of number one importance, what you're going to see is more capital moving into the shale regions as well as capital into Canada to start increasing production and take advantage of the $75 oil. Countries in Latin America like Ecuador or Mexico, they're also, happy to see higher prices since so much of their domestic budgets depend on the price of oil.
Well, thank you. Lots to watch there. Andrew Lipow there, president of Lipow Oil Associates.
Thank you.